Hello everybody, welcome back. We got a good one today. This is going to be by far the best portfolio update in this channel's history so far. In today's portfolio update, we sold a bunch of stuff this month, we bought a bunch of stuff this month, we've grown our portfolio a lot this month, and it's our largest month of dividend income yet year to date. So guys, if that all intrigues you, make sure to keep watching. And guys, if you're new here, my name's Ryan. I'm 16 years old. I do dividend growth investing for the long term. It would mean a lot if you guys could subscribe if you find content about dividend investing, portfolio updates like this, videos on stocks that have been in a downturn recently. I post all that stuff. If that interests you, make sure to subscribe. While you're at it, share the video with a friend or family member that you think would find value in this. Smash the like button while you're at it. Turn on post notifications. And of course, roll the intro.
Hello, I like money.
Currently, my portfolio's value is $13,603. This is up about $600 from last month where we were about at $13,000. It's definitely been a good few weeks for capital appreciation wise. But let's compare last month's portfolio to this month's current state. Our estimated yearly income is up by $15, which is really good. Our investments that pay dividends has stayed the same. Our portfolio yield has actually gone up because I've bought some higher yielding stocks this month, as you guys will see. And our average monthly income has gone up by about $1.30. Again, if you guys are new here, some months will be bigger than others, as you know, the market has been really volatile recently, and I've been trying to buy on dips. Shameless plug here, but if you guys want to see all my buys and dividends received earlier, you don't want to wait every month for these portfolio updates, join the Discord. The link is in the description. It's free, no stupid courses or whatever. We discuss everything on there. Go check it out. Overall, a pretty good month for growth, but that goal that I made at the beginning of the year, we're halfway through the year of getting $500 in estimated annual income. I might not achieve it just because I've been focusing on buying, lower yielding, high quality companies. Now, let's move on to all the buys and sells this month. Alright guys, so my investing mentality has kind of switched this month. I've been focusing, I haven't had a ton of cash to invest from my personal income since I don't have a part-time job yet. So to raise capital to buy into some companies that are trading at lower valuations, I've sold off some of my stocks. To start off, I bought one share of Intel at $41.33. Intel has good share buybacks. They're trading a really low valuation right now because they're in kind of a rebuild mode. But they have a low payout ratio and look to have some good dividend growth in the future. This is a position I'll keep buying into if it keeps trading at these valuations. Next, I bought one share of Target at $144.18. Target fell 30% in one day because of a missed earnings report, mainly driven by issues that they can't control. I waited a little bit to buy some just to let the earnings, sink into my stomach because I felt that if I were to buy in right immediately on the 30% dip, it may not have been the most logical decision. So I waited and I got the stock about 6% cheaper than when it fell. Target's a very strong company fundamentally. They do share buybacks and have really good dividend growth. And this is definitely a company I want to have as a top 10 position on my portfolio, and I'll keep looking to buy. Now, I sold out of half of my position in Kimberly-Clark at $122.54. KMB is one of the only stocks that hadn't fallen on this day. I think the stock market was down about 900 points. I sold the company to a tiny gain with my dividends. I think Kimberly-Clark is a good company, but I saw better opportunities elsewhere during this time. Still own 2 shares of Kimberly-Clark, but if we have another major drop, I might look to sell out. With that money I got from Kimberly-Clark, I used it to buy 1 share of Starbucks at $71.11. This is a really good price for Starbucks in my opinion, and I'll look to buy more at these prices. And I used the remainder of that money to buy 1 share of 3M at $131.26. A tremendous yield for 3M right now, and I really thought this was a good buy. 3M is becoming a top dividend payer in my portfolio, and I really like it. They're dealing with a lot of lawsuits right now and a bunch of issues that every other stock has to deal with. They're a dividend king, and I'm not really concerned of a cut at the moment. Next, I bought 1 share of Altria at $41.71. The stock fell 10% almost in one day because of the FDA banning Juul e-cigarettes. Again, I'm not really concerned about this because Juul's a tiny part of their income and revenue. Altria has good pricing power during a time of high interest rates. And based on current free cash flows, their dividend is pretty sustainable. Not to mention, they also perform share buybacks. Altria is going to be a position that I chip into and that I'm going to have a moderate position in my portfolio. It's bringing in really good dividend income right now. I also think that Juul is going to find a way into the United States still. I think that this is only going to expand, Juul sales outside of the United States. More Juuls are going to be illegally imported into the U.S. now that I think of it. This is a big overreaction from institutional investors who don't care to look into the actual companies. But guys, Altria was trading near $60 a couple months ago, and now, it's near 40, and there's no fundamental change in the business. I think this is silly. Next, I sold one share of the Colgate-Palmolive company at $79.55. This is another company I sold at a slight gain with my dividends that I got in the 1 year that I owned it. Initially, I planned to buy a share of Starbucks and wait for it to dip back into the low 70s, but I saw a better buying opportunity for my next buy, which is 2 shares of Walgreens at $39.55. Walgreens was trading cheap to begin with, but now this has just got out of control. They had a good earnings report and just traded down because of institutional investors being scared. Once again, they had slow revenue growth, which, do you really expect Walgreens to, have revenue growth, with companies like Apple and Microsoft? Walgreens currently has a payout ratio of about 40%, and I think it's just going to be a good slow-growing company, which is what I want in my portfolio. Those are all my buys and sells in June, and now to everybody's favorite part of the video, my dividends I received. June is historically a really good month for my dividend income, and I think it's really good timing that the market is trading cheaply right now so I can reinvest these dividends at even better prices. June was the largest month of dividend income in my investing journey so far, $39.18. I got my first ever dividend from Visa at $1.13. I got $1.46 from Intel, which I'm happy to reinvest at these current prices. $1.56 from UPS. $4.21 from Southern Company. $3.47 from J&J. $2.50 from Microsoft. $2.92 from Walgreens, which will only continue to get bigger. $1.83 from Target. $7.60 from 3M, which is really big, and that doesn't even count the last share of 3M I bought. My 3M payouts are only getting bigger. 94 cents from Hershey, my annual 37 cents from Stag that I get every month. $1.80 from Realty Income. Realty Income, that payout was $1.78 like a month or two ago, so the snowball effect is really doing its job right now. 67 cents from Waste Management, a company I gotta add to eventually. $1.04 from VF Corp, which is reinvesting at really low prices right now. $4.22 from McDonald's. $1.11 from Corning, which is a company that I might sell out of once I get back into the green with the company. And lastly, $2.35 from Pepsi. That all comes out to a grand total of $39.18. My next payout from all these companies will be in September and then December, and I'm thinking maybe by December I'll get to the $50 mark. Here's how I think my investing strategy has changed a bit over the last month. I think maybe in the last month I've realized that I want to start investing more in, the 15 companies that I truly love and want to hold forever. And I'm realizing that some of these companies are on really good sales right now, like Starbucks and Target, and that's why I'm going to be starting to sell out of some of my positions that I've had gains in if there's big red days. My investing strategy for June is just going to be taking it day by day and seeing, what stocks are up, what stocks are down. From there, I'll be looking if I want to sell an individual stock to reinvest for a better opportunity in another. That's going to wrap up the video, guys. Before we end real quick, I want to show you guys a Warren Buffett video. I want to thank you all for watching. If you're new here, I upload every Tuesday and Saturday now, guys. Tuesday is just for the summer, extra uploads. Thank you guys so much for watching. Smash the like button, subscribe, and of course, do dividend stocks at drugs. Have a good one.
Berkshire to being a steady compounding machine that should continue to create value for a very long time. Would you both please elaborate on this compounding machine and the machine's ability to continue to adapt to keep this value creation durable? And then is this legacy one of your sort of primary motivations when you wake up every day?
I would say it is the primary motivation, but it's been that for a very, very, very long time. No matter what was going right in my life, if things were going badly at Berkshire, I would not feel good. And I don't need to be spending my time working on something that makes me feel bad about the results, when we get through. And it's something that's doable. I mean, the culture is stronger now than it was 10 years ago, and it was stronger then than 10 years previously. It moves slowly, but it goes in the right direction. And when we get chances to deploy the capital, we've always tried to make any entity, whether it was the partnership originally or Berkshire now or Blue Chip Stamps when we owned it, or even Diversified Retailing, we wanted them all to be compounding, in effect, be compounding machines. That's why people gave us capital. That's why we put our own capital in. And if we failed at it, we really felt like we'd failed. It didn't make any difference how much money we made from fees or anything like that. We knew what our yardstick was, and so that will continue. I think Berkshire is better situated than it's ever been, except for the fact that size is a drag on performance. And I probably wrote that 40 years.